Morning everybody, it's Chris here from Serene Education with the 4 Majors Analysis update for the 21st of April 2011. We're going to be looking at our Euro against the US dollar. This is on our CTC strategy template, made up of 6 time frames, from the daily right through to the 5-minute intraday. Okay, I'm just putting in the intraday, or the daily swings and trend lines, and support and resistance levels. These are primarily just to give me an indication where I've seen price support and resistance. Don't be too finicky about it, just look at areas where we've seen hesitations and consolidation areas. You'll notice now, looking at yesterday's date, we had a huge bullish engulfing. The euro rallied really well. Some of our students did fantastically well over the past couple of days on this particular trade, having found support the day prior on a previous resistance level. So this being new support, staying above all the moving averages, and the CTC in our favor has seen this climb steadily, and yesterday we saw it close higher than entire weeks worth of trading, and we've seen the Asian market take it forward even further this morning, trading higher. I'll just zoom out. So daily, you can see we're trading well above the 14,2500 mark, which was a prior resistance level, quite a strong resistance level, and a pullback and continuation in that direction. Just move it sideways even more. Yesterday's highs at 14,500 was a prior resistance way back in January of 2010, and we're trading well above it now. So in terms of momentum, this pair seems to be gaining more and more momentum as time has passed. It's taken no concern whatsoever of Eurozone issues, i.e. Portugal, Spain, Ireland, debt, etc., etc., etc. It's just taken all in its grasp. We've had interest rates increase, not much, but somewhere it's finding the bullishness to go forward. But most of us traders here at Serene Education trade what's on the charts, and as long as the charts are telling us that we should be looking for opportunities north, or bullish or bearish, then we follow those. So intraday, we should see pretty much most of the charts showing us upside movement. Sure enough, our 4-hour, very steady, very steep trend since the bounce at our 14,200 mark. The same can be said for the hourly chart. Great swing trades to the upside, staying above this intraday long-term trade trend line, pulling back slightly just at the latter part of yesterday's trading, and then going straight into this morning Asian market open slightly sideways, and then bang at 2 a.m. GMT this morning we've seen price revert to the upside. We're seeing the same now at 6 a.m. At 6:20 a.m. GMT this morning we've seen price push higher. Now on a 15-minute you can see the breakout of the Asian high, trading above all the moving averages, and our CTC most importantly is still blue on either side. So you can see how the 50-period moving average on a 50-minute time frame has acted as a great support. And if I draw the trend line for the 50-minute chart, you can see swing highs all the way up. Pause, which is going to happen. There's an intraday pause, staying above that level, price squeezing, and then going to the Asian market, finding support again on a trend line, and then pushing higher. So looking for further extensions today, guys. We're not going to be looking for shorting opportunities. Just be aware that we are trading above a 14,500, which is the long-term support and resistance area. So if anything, if it does decide to pull back, then that's going to be our yardstick. It can't fall lower than that. Obviously, if it closes lower than that, then it's trading lower than a prior swing high, and it's going to cancel that swing. So importantly, it needs to be trading higher than 14,500 going into next week. Moving on to cable, you notice this pair did exactly the same as its counterpart. Found a lot of momentum yesterday. This is after finding support on a previous support area. There we go. And sure enough, that previous support being at 16,2500, which is a long, you can see a number of weeks of sitting bouncing sideways. Even though the momentum was shifting to the downside, you notice the highs were getting lower. And then we had a massive breakout yesterday. As long as I said if it traded higher than the breakout, then we should be looking pretty. If it stayed lower and closed lower, then there was going to be a good opportunity to see further selling. But it maintained that momentum going into the US session and trading higher than the previous swing to the downside. Now cancelling it. That one over there, this previous swing. Cancelling it and trading higher now than the all-important 16,400 mark that I mentioned, which has been a long-term support and resistance area for this pair. And the Asian market, and going into the European session this morning, has just literally seen this gain even more strength or momentum. So intraday we should still be seeing a lot of upside movement. There we go. This is an hourly chart. Notice how the moving averages have all helped this pair. 20-period moving average in particular, holding strong on an hourly chart. CTC still is in our favor long term. Look at that. Swing high, swing high, swing high, swing high. So, and pulling back, consolidating as it's going along, but more importantly, breaking and trading higher than the 16,400 mark. In this case, you can see the 16,450, and then pushing higher. We've had a slight pullback just before the open, or 6 o'clock this morning, but all importantly, it's managed to bounce higher. And if you want to take that as a 16,400 mark, so as long as it can stay above 1643, or ideally the trend line, which is acting as a great support area for this pair, then we should be looking for further extensions to the upside. 30 minutes, same thing, trading higher, and then it's than the Asian high. Still trading higher than all the moving averages, and the CTC is blue. So shouldn't be looking for anything other than long opportunities. If it's trading well below these highs or the swing, then yes, look for a possibility of downside movement. However, it's got to break and close higher than lower, than the previous low, which is here at 16,100. If it's doing that, then it's trading below the trend line, and if it's trading below the trend line, then it's broken that trend, and if it's broken that trend, then the trend is then registered as null and void, and then we should be looking for opportunities further to the downside. Next up is the US dollar against Swiss franc. This pair, obviously, if its two counterparts are gaining strength, this should be doing total opposite. And 0.900 being a prior support, had a breakout recently, a pullback, and yesterday failure at the 900 has seen price revert to the downside, and we're seeing further selling. This pair is trading at an all-time low against each other. The US dollar is trading at an all-time low against the Swiss franc. If I look at a weekly chart, for example, you'll notice if I zoom out, price going way back to 2005, 2004 is still very negative. You can see the prior low for this. If you just want to look at where it was trading like it in 2004, back to the early parts of 2008, and I extend it, we have roughly until around about 0.8500 or 0.85. That's another 500 pips away of profitable movement still to go, if this is the case, if it's following trend direction and swings, swing lows on a weekly to the downside. So very interesting. So still a long way to go. So if it's showing negativity across the board on a daily, then sure enough you should be looking for further extensions or looking for opportunities to the downside because it's trading lower. So you can see on an hourly, 4 hour for example, trading well below a prior swing. In this case, support, breakout, slight pullback, and then continuation to the downside. The same will be seen on the hourly chart. Hesitation, support, 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 up to the upside, consolidating around a prior resistance area, breaking higher, the 200 period moving average coming into play now and pushing this lower. Failure to break the 200 period moving average, which was ultimately, if move it up to 900, which is the daily resistance support area, you'll notice that smack bang into it and failed to go higher, and subsequently posted lower lows, which meant lower swings. Moving averages crossed over, and the CTC all went red, which indicating we should be looking for bearish sentiment, and sure enough, it's fallen lower. And just as we speak, we've seen price really push lower. See, even at the open of the European Open session in play now, and we've seen price push quite significantly down, and it's dropped almost 20 pips in the last couple of minutes. Last pair of the day is US dollar against Japanese yen, and here again you can see the US dollar losing a lot of momentum against the Japanese yen. After the intervention, we saw a huge price deviation to the upside, which is great because when it broke above all this consolidation, and by trading higher in the last couple of weeks, has seen price move above a 200-period moving average, which all thought was quite bullish for the time. And by trading above 200-period moving average, obviously stems that it's quite bullish, but it failed to close higher and use that 200-period moving average, the green line, as a support. And failing to do so, what happened was it broke lower. So a guideline would have been the 83.50 mark as a support area, and because that area did not act as a strong support, price broke through it, traded lower, and the CTC went negative, which confirmed that the momentum had changed and we should have been looking for further extensions to the downside. And sure enough, that momentum drive has picked up steam as it's moved lower. We're trading, after a number of days of indecision, we're trading low this morning on the Asian market. So intraday we should be looking for opportunities further to the downside. You'll notice on a 4 hours I tried to find a lot of support on the 200-period moving average and failed to do so, posting lower swing lows. And sure enough, CTC is in a negative territory. Same here on an hourly chart, for example. A lot of consolidation towards the end of yesterday or the last couple of days, going up and down, up and down, up and down, not really focusing on a potential movement, fake outs along the way, but most support along the 82.35 mark, but all importantly, not able to break previous strong support areas. Then becoming 83 was the resistance level, posting lower swings, and by doing so, failing to find support again at an area, breaking out, consolidating, and pushing lower. So it's consolidating after the breakout and then pushing lower when the momentum is driving it down. That's it, guys. Look, most of them, are pretty self-explanatory this morning. All we've got to do is look for pullbacks to get into these trades if you haven't into them already. That said, please make sure you follow your money management rules. If you're going to be getting into a lot of these trades for further opportunities, make sure that your entry and your stop do fit your trading criteria. Your money management rules are so important. If you're not following those, then if you do get a couple trades wrong, you're going to find that you could either clear out your accounts, or you're going to be trading a negative risk to reward return. So, which is not what we want to be doing. Make sure that when the pips present themselves, that you lock them in, or you take them off the table, you close your positions. Either way, we're only looking for a small return, but if you get a consistent return, and over a period of time, you'll find that the compounding those returns will definitely see you becoming more and more profitable as the months or the weeks go by. Most importantly, enjoy your trading. Don't make it difficult. Just go with what the chart's telling you. Look at price momentum, look at trend direction, bigger time frames, and that will indicate what you should be looking for intraday, and go with that. And most importantly, trade serenely.